PayPal Holdings reported earnings after the markets closed. We'll come in here, take a look at Q3 results, take a look at the guidance for Q4 made by the company, take a look at some metrics and important figures, jump into the statement of income, cash flows, and balance sheet as always. Even take a look at my thoughts on the conference call which just ended over at PayPal, and as always jump into the technicals and really share where I think PayPal stock is headed in the short and long term. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. These videos are value packed, and if you find them useful, your support would mean a lot. Shares of PayPal are up nearly 4% in the after hours. They were up only 1% before the conference call started. However, after the new CEO, Alex Chriss, shared his thoughts, this stock is up close to 4.5%. We'll get into my thoughts on the conference call, but coming in here and taking a look at Q3 results. So total payment volume, or TPV, that grew at 15% on a spot basis and nearly close to $387 billion. Total net revenues coming in at $7.4 billion. That was growth of 8% on that top line. And then non-GAAP EPS coming in at $1.30. That was growth of nearly 20% year over year. That beat expectations over on Wall Street, both on the top line and bottom line, as revenues were expected to be closer to $7.38 billion. So a small beat on that top line, and then EPS was expected to come in the range of $1.23, so a 7-cent beat on EPS right there. And so you see non-GAAP operating income coming in at $1.6 billion. That was growth of 8% on that non-GAAP operating income, and then free cash flow coming in at $1.1 billion with operating cash flows of $1.3 billion. In this most recent quarter, PayPal also announced the appointment of a new CFO, Jamie Miller. And so along with the new CEO, Alex Chriss, they also have a new CFO incoming, really a big change on the overall C-suite altogether. Now, I would give PayPal a checkmark on their Q3 results, as really expectations were beat along the board and came in where expectations were or slightly better. In terms of Q4 guidance, they do expect revenues to grow at 6 to 7% and then expect non-GAAP EPS to come in at $1.36. That would be roughly 10% growth. In terms of estimates over on Wall Street, they expected EPS for this upcoming Q4 to come in at $1.40. So PayPal coming in shy on that EPS side for the Q4. In terms of full year EPS, non-GAAP EPS guidance, they're coming in at $4.98. That would be roughly 21% growth on a full year basis. Estimates on Wall Street were closer to $4.95. So PayPal coming in a bit shy on Q4 EPS, but coming in on the higher end of a full year 2023 EPS. So overall, a good sign in my opinion. Their strong Q3 beat on that EPS will help bolster their full year EPS guidance. Now, in terms of transaction and account activity, so we see active accounts that did decline quarter over quarter, and really for the last 4 quarters, again, it has been declining. You see back in Q4 of 2022, active accounts were sitting at 435 million. Now they're closer to 428 million, and you see over every single subsequent quarter they have been declining. But what I think is more important is transactions per account and total transaction volume, and that is still steadily growing even though active accounts are declining. And PayPal mentioned this on the conference call that they are trying to churn through low activity accounts in order to keep engagement high on existing customers. And so transactions per active account reached 56.6, and that is growth of 13% year over year. You see over the last few quarters that has been growing in the mid double digits range. And then total transaction payment volume, we saw that was up 11%, close to 15% on a spot basis, up to $387 billion. So again, I think these two metrics of transactions per active account and total transaction volume is far, far more important. That is how PayPal generates their revenue compared to a decline in active accounts, and especially those being minimally engaged active accounts. That is part of their strategic decision to focus on driving higher activity levels with existing accounts. So again, I think PayPal executing on what they have said. This should come as no surprise that active accounts are declining. PayPal has again mentioned time and time again that they are trying to churn through these low active accounts and drive higher engagement through them. That is exactly what we are seeing out of their numbers. And so PayPal sticking to what they're saying and executing on that. Now, net revenues, again, at $7.4 billion, that was growth of roughly 8% on that top line. On an operating expenses side, PayPal did mention they did a good job controlling costs on non-transactional expenses. And so you see G&A was up slightly, but technology and development was down nearly $70 million. Sales and marketing was down nearly $100 million. Customer support was also down and then you see transaction expense and transaction credit losses were up. But again, as the revenue scales, these transaction expenses scale along with it. So I think where PayPal has levers to pull is on non-transactional operating expenses, and that's exactly what they did a good job controlling, as those were down nearly 12% year over year. Now, your total operating expenses did come in at $6.2 billion. That was up nearly $500 million from same time last year, and our operating income rising roughly $50 million from a year ago, that coming in at $1.16 billion. Paying some income tax, we come to a net income of $1 billion. Last year, we were sitting at $1.3 billion. So on the surface, net income was down year over year, but they did recognize a large other income last year in the same quarter. So I would really come in here and take a look at the operating income and compare these two. You see operating income is up just slightly from a year ago. Now, PayPal does have some levers to pull when it comes to their operating expenses, and we'll talk about that when we take a look at my thoughts on the conference call. Now, taking a look at weighted shares outstanding, PayPal is doing a tremendous job of buying back shares. You see they have nearly a $5 billion share repurchase expectation for full year fiscal 2023. And so they are executing on that. They purchased a boatload more shares this quarter. And so you see their weighted shares outstanding have been declining steadily over the past, I believe, 8 quarters. They've gone down by nearly 7%. So share buybacks is a big way that PayPal is returning shareholder money. And they did say this on their conference call, that right now they believe their valuation is far too low, and they believe returning money to shareholders in the form of share repurchasing is good capital allocation. And to that, I would say I would have to agree. Moving on to the statement of cash flows, we bring down that $1 billion net income number. Last year, we were at $1.3 billion. We get to add back some transaction and credit losses, some depreciation, stock-based compensation. We come to a net cash provided by operating activities at $1.25 billion. Last year, we were at $1.7 billion. But in the same quarter last year, PayPal did recognize a net gain on strategic investment. This is a one-time gain that they had recognized last year, and so that sort of bolstered up their cash flows last year. And even on a 9-month basis, you might be thinking, on much higher net income, how come PayPal has far lower net cash provided by operating activities? That's largely due to them refinancing some debt. And so they have this nearly $5.7 billion worth of loans receivables, and then have $3.6 billion of these repayments of the loans. And so cash flows over at PayPal looking a bit wonky due to one-time expenses, especially recognized, one-time gains, especially recognized last year in the same quarter. Now, taking a look at how they spend this cash flows, you see in this last quarter, PayPal purchasing nearly $4.4 billion of investments, but then also recognizing a sale on investment of roughly $5.3 billion. And then similarly with the origin and repayment of debt, those sort of cancel each other out. And so you see really PayPal using $300 million in investing activities. The majority of their operating cash flows goes straight into the repurchase of treasury stock. This is their stock buyback. You see over the last year, that has accelerated as the stock has declined. And then over the last 9 months, that is coming in at $4.4 billion. Last year, we had purchased nearly $3.2 billion worth of common stock at this point. And so again, PayPal over the last 8 quarters repurchasing nearly 7% of their shares outstanding. That is a way that they are using their operating cash flows, basically directly plugging that into the repurchasing of their common stock. And as their stock has declined, they are putting more and more of their operating cash flows into the repurchasing of common stock. Moving on to the balance sheet over at PayPal, looks fairly similar to how it did back in December of last year, just 9 months ago. Cash and cash equivalents coming in at $6.8 billion. That is roughly down by $1 billion over the last 9 months, but short-term investments are up roughly in line. And so your total current assets sitting at $56.6 billion. That is basically flat over the last 9 months. And then total current liabilities coming in at $43.4 billion. So having current assets in excess of current liabilities. PayPal does have a decent amount of long-term debt at $10.6 billion. So yeah, their long-term debt is more than cash, but again, having current assets more than current liabilities is not a huge deal over at PayPal. This balance sheet could get better, especially if they consider slowing down the repurchase of their common stock. Yeah, PayPal could use some of that operating and free cash flow in order to pay down this debt. But again, I think right now the better use of their money is buying back the stock. Now, speaking of the stock that did perform better based on PayPal's Q3 conference call, and so here are my thoughts on how that conference call went down. And this was really the first conference call by Alex Chriss, the new CEO, who's come over from Intuit. And he basically repeated this on the call a number of times, calling PayPal a growth company. He really emphasized that PayPal right now should be considered a growth company. That's where he wants to take the company. And at its core, PayPal should be considered a growth company. Now, considering its valuation currently, it's certainly not trading at growth multiples. But again, if we can see Alex Chriss execute on that vision of making PayPal a growth company, yeah, you can expect multiple expansion over at PayPal. And so if they begin growing, and again, they're still expected to grow at a strong mid to high double digits clip on that EPS side. And so certainly I think PayPal does deserve price to earnings expansion, even free cash flow expansion. They're expected to do roughly $5 billion in free cash flows, and this one is sitting at a market cap just over $55 billion. And so again, I think it can experience some expansion on that free cash flow multiple, and certainly expand on its price to earnings multiple over the subsequent few years. Now, Alex Chriss also did mention that he wants the company to focus better on execution and efficiency. The number of times he probably said execution and efficiency was through the roof in this conference call. It honestly sounded very similar to what Mark Zuckerberg sounded like basically a year ago on Meta's conference call, where he called this the year of efficiency over at Meta. Yeah, I got those same vibes from Alex Chriss on this conference call, where he kept emphasizing execution and efficiency. And he said the cost base over at PayPal is too high. Currently, they are doing too much and are spread out way too thin. He wants to manage expenses over at PayPal. He said they are a profit growth company, and the way they do that is by managing expenses and cutting down their cost base. Now, he also wanted to be clear about how the business is managed in the upcoming quarters. He did mention that he wants to be more transparent for investors and really customers also, where the money over at PayPal is going, exactly how they are using their operating expenses, and he wants the company to be more laser focused on profit. He also did say using assets over at PayPal need to be done better. They have really good assets in Venmo and Braintree, and he wants to use those assets better. He wants to make Braintree an even higher margin business that is part of their unbranded checkout, and so does contribute to lower margins, and that's where he sees levers to pull over at PayPal. He said the employee base is very efficient and driven, but again, that asset needs to be utilized better. And so in my opinion, I think Alex Chriss will be looking to sort of shave off some employees over at PayPal and again, make the business more efficient and execute better. Overall, my thoughts on this conference call was that he looked confident, he sounded confident, and he sounded determined. He really kept emphasizing that PayPal is a profit growth company. They are looking to cut costs, be more efficient, and focus on really two main groups, the customers and the shareholders. And I think that is what you would love to hear from an incoming CEO. And he mentioned that this stuff won't happen overnight. It will take a few quarters, and in the upcoming quarters, he'll show his progress and really the company's progress on these execution and efficiency levers. And so we'll see how that goes. But overall, a very strong conference call, in my opinion, the first one for Alex Chriss. Now, speaking of that conference call, that is what was sending shares higher, as before the conference call, shares were up nearly 0.5% to 1%. And then during the conference call, shares rose as high as 4% in the after hours, now trading at roughly $53.35. Now, 4% in the long term of things for PayPal is really not a big deal, considering how much this stock has fallen over the past 2 years. Over the past year to date, this one is still down 30%, and even over the last 5 years is down close to 40%. So I'm not breaking any news when I say PayPal has really struggled over the past 5 years, but in my opinion, I think the turnaround for PayPal is here, and I'm not saying that PayPal stock will shoot to the moon tomorrow or it will go up in a straight line, but I think the clouds and really headwinds around PayPal have been in their rear view now, and I think a lot has been priced into the stock. In terms of a valuation perspective, this is trading at just under 11 times a 2023 valuation and under a 10 times forward price to earnings on a 2024 valuation. And again, they did guide for EPS to come in at $4.98, slightly higher. And with a new focused and driven CEO, I think them implementing cost cuts, cost efficiencies, and really focusing on increasing their revenues and growth over at PayPal, yeah, this company can be poised for some strong growth. And I think a lot of negative news has been already priced into the stock, where it is now up to them to execute on what they shared. And if they do just that, yeah, this stock is likely headed much higher, close to $100 per share, I'm sure, in no time, considering that even if this valuation was at $100 today, the price to earnings would be at just close to 20 to 21 times. And certainly if they increase their growth rates and continue to execute how they have shared, yeah, that sort of multiple is going to be justified on a company that's, once again, growing transactions per active account, growing users, growing revenues, and growing profitability at a much faster and leaner clip. Again, the stock has seen a massive decline, and so it won't shoot to the moon right away. In my opinion, it will see some pauses and some selling. I think the first level of resistance PayPal stock really will experience will be closer to around $57 per share. I think that is the next natural resistance for PayPal stock if it does come in here and see a rally in the subsequent weeks. Like I've said in so many stocks before, I wouldn't come in here and unload a full position in PayPal at $53 per share. As attractive as that might be from a valuation perspective, this is still in the context of lower highs and lower lows, which has really been going on for a very long time. We can trace this back to March of 2022. PayPal has been locked in this downtrending channel and has seen rallies to the upper end of the channel, but again, has made lower highs and lower lows consistently. And right now it's sort of in the middle point of this channel. You can likely drag this line higher if you would like, but with a stock like this, as the news turns better, with a new incoming CEO, with a new CFO, and if they really execute on what they say, yeah, the stock price will eventually reflect how the underlying business is doing. And so if the business is, again, it's still a great business. Keep in mind, this business is not declining as of now. It's not doing poorly. In fact, it's doing great. It's still growing revenues and earnings very strongly. And so eventually, if that continues, the stock price will reflect those underlying fundamentals. PayPal will continue to be doing that share buyback, which will help you as the investor as you get a larger portion of their earnings. And so this stock can really see a rally over a few months, really over a couple quarters, and on its way up. Again, I think you can accumulate these shares of PayPal. Certainly if it does break out of this downtrending channel close to $64, $65 per share, yeah, all the way up really close to $70 to $80 per share, I think PayPal can be a strong buy for the long term. This company is focused and still executing very well. Yes, they do have competition, especially in the US, from an Apple Pay, from an Affirm, from a Square, but that doesn't mean to say that they're declining revenues or earnings. In fact, they're still growing at a very nice clip. And so PayPal, even on the way up, I think can be a buy really unto $70 and $80. I think this stock can hit $100 by next year. It was a mispriced stock back at $70. It was a mispriced stock at $80. Again, I think it's a far mispriced stock at $50, and it can still head lower. It can still come down to $40 and again, still be mispriced. So I would solely build out a position into a stock like PayPal, not unloading shares all at once. That was my take on PayPal. Overall, a very strong quarter, a very strong conference call by management, by the new CEO, Alex Chriss. And we'll see where he really takes this company over the subsequent quarters. I think he has a strong vision and strong outlook for the business over at PayPal. And again, I do think this is a strong buy really all the way until $70 to $80. I do see PayPal rebounding substantially in this upcoming 2024. They are expected to post EPS of $5.66. So a very compelling valuation in terms of a price to earnings and even a price to cash flow basis. That was my take on PayPal. Let me know your thoughts in the comment section below. Are you coming in here and picking up shares of PayPal at $50, or do you think this one is a value trap and continuing to head lower in the subsequent few weeks and months? As always, thanks so much for listening, and I'll catch you guys in the next video.